Hello, everyone, and welcome to the podcast channel of the Vietnamese American Business Association, also known as VAPA. Each week, we will post a new video of a specific business or topic because the intention of this channel is to bring benefits to the business community.
If you are a business that is borrowing between, say, 300,000 to around 5 million, you're much better going with a smaller bank, or a medium-sized bank. We call community bank.
What is the process for somebody that wants to open a loan?
Oh, okay.
How's the best way of them, to apply for a loan without being rejected?
Most important thing is put together a good package. Have a good business plan. Have your usual, all your financial history. Make sure your credit. Check your credit. Make sure your credit is good. And whatever the bank asks for, they will give you a checklist usually. Make sure it's complete.
Okay.
Don't leave. A lot of the time, people do things kind of sloppy, and then when the banker receives a package, that is missing information or it's just not well put together, it's kind of affect their motivation, their enthusiasm. If somebody puts together something really neat, 3 years tax return, 3-year financial statement, interim financial statement, accounts receivable report, accounts payable report, personal financial statement, if everything is very organized and neat, you are much more likely to get approved because it just shows effort.
How long would that process take from the time I put in my application for a loan to the time where I receive an answer?
Oh, okay.
How long would that process?
If it's unsecured, if we're just going to file what we call UCCs, Uniform Commercial Code, which is it's just something we follow with the Secretary of State for the state of California, which if that's the only security, 2.5 weeks. If there's going to be real estate involved, it's going to be 4 to 5 weeks. Because real estate, whenever you got real estate involved, you have to get it appraised. You have to go out to a third party valuation company, and then they will come back and give us the value of the property based on their comparable values in the area. There's several approaches that they use. Okay, but the other thing I should mention is if it's unsecured and we're just taking UCC, it depends. The timing, turnaround time also will be affected by the amount that you're requesting. So if you're requesting $1 million or less, it's probably like 2.5 weeks. If you are going for $5 million, of course, there's more due diligence.
Yes.
So we will hire a third-party company to come out and then not do like a full-on audit, but they will check your accounts receivable and your accounts payable, your inventory, and so on like that. Make sure your accounting is all right. So and then that will take another maybe 2 weeks. So you could be looking at 4 or 5 weeks.
Okay.
Yeah.
So just to summarize and making sure that I'm getting this right?
Yeah.
If I'm opening a boba shop or a nail salon,
sure.
and I am asking for $1 million and less in loans,
Right.
it would take me about 2 to 3 weeks.
Right.
That's only if I did my homework and I gave all my paperwork, all the documents that's necessary for the loans, right?
Correct.
If I am looking to buy a golf course and putting a hotel together, and I'm asking for more than $5 million, then that's going to take at least 3 to 4 weeks, depending on the third party and all the.
Yeah, if you were going to do hotel, that would involve real estate.
Yes.
So that's going to be at least 5 weeks. Yeah.
Okay.
Thank you very much.
Can you give us a little bit background on why you went into the industry of banking?
But one of my friends convinced me to take a class in macroeconomics, and I had lots of electives, so I took that and I got an A. So I says, oh, okay. So it's, I know all business majors have to take economics. So I thought it's good degree to have is relevant to business. And because I had a degree in economics, I look at what kind of career can I do. So the only job I could think of was a banker. And I like working in the bank because in those days everybody wears nice suit, nice clothes.
Yes.
But I always like working at Asian banks. That's always been my career because Asian banks are more relationship focused, and we look at everything as a case by case basis.
Okay.
So we don't have rigid policies that say we don't do this or we don't do that. Like we're not in this industry, we're not in that.
You have more
industry.
flexibility.
Much more flexible. But today, I'm at Bank of the Orient. It's the oldest Asian American bank, basically Chinese American bank in San Francisco Bay Area. It's been around for 51 years, since 1971. And I'm the president and CEO. And this is, I hope, this is going to be my last career stop.
When are you planning on retiring? Is this your announcement?
Oh, no.
Official announcement right here.
I'm 58. I thought, I can retire in 4 years when I'm 62. But then I thought about it. What would I do?
Yeah.
So who knows? I'll probably stay on there as long as I can.
Okay.
And then
Let's say if FDIC only protects you to $250,000.
Right.
What do you do if you have more than that? Do you start diversifying to different banks? Do you go to what do you do?
You can open different accounts. If it's individual, you can open different accounts in different names. So you could have one account could be under husband's name, one could be under wife's name, or it could be. There's different ways to set that up. And then you look at the health of the bank. That's, I think, if the bank's been around for a long time, and as far as the bank's financial statements, if it's publicly traded, you can always look that up. Even if it's not publicly traded, you can go to the website, it's FDIC.gov, and you can check the latest. It's even though it's not a public company, but every bank has to report to the FDIC quarterly, what we call call report.
Okay.
That will tell you how much, that'll give you the total assets, breakdown of assets, liabilities, net worth, and the profitability of the bank. So, but that works. Splitting accounts works, for individuals. Okay. But if you have a business, it's really hard to navigate that $250,000 because, of course, if the bank gives a company, say, $1 million line of credit, so they will be expecting the company to open their checking account.
Sure.
At least their major checking account. First of all, if it's line of credit, when they go to get the advance the line, we advance to the company's checking account with the bank. So, and the bank won't be pleased if, they're giving you unsecured money or even a secured money and your bank is someplace else.
Yeah.
So I guess at that point, it's really important to just know the bank.
If I was a business owner, how do I know which bank to bank with? How do I pick my bank or where to get my loans?
Pricing is really the major driver. Okay. So, typically, whoever is the borrower will compare banks. Who's ever offering a better deal, they will usually get the business. But if it's a business banking relationship, I always recommend that companies, especially smaller to medium-sized companies, should not go with big bank. Not to badmouth big banks, okay? But every bank has their strength, where they're good at. Okay, for a really small deal, like $100,000 or $150,000, actually big banks can be pretty good because they don't put a lot of effort into underwriting. They will just check the credit of the company owner. Maybe they look at the last financial statement. They put it's score like we call scoring. They put it through a scorecard thing, and if it meets the minimum, they're very even not, now. I know actually it's probably more than 150, probably 250, even 300. So. And they're fast, with those deals. They can get back to you probably within a week because they're not doing a lot of due diligence and they're big. Yeah. So if, they do the math and they have an algorithm, okay, out of maybe every 30 customers like that, maybe one will fail. So they're willing to take that risk, and it's not going to, for a big bank, it's not going to impact them. But, so for a really small deal, a lot of people do that. They go to a big bank. So they're good in that area. But then you hit the area, like say 300 to maybe 5 million. Big banks tend to overlook that because then they want to go for bigger deals. So over 5 million. So and then they have their whole full-on credit team do their analysis, and it goes to layers, management. Yeah. But they can be good there. But if you are a business that is borrowing between say 300,000 to around 5 million, you're much better going with a smaller bank, or a medium-sized bank. We call community bank. At our Bank of the Orient, we have many customers where we started at 100,000, 150, 200,000. Those same customers are up to like $2 million today, because we get to know them and we see the track record, and we give them a lot of credit for that, for having a good track record, and so the process become more easy to increase. Yeah. So once you know them, I've had customers go from, I remember the smallest deal I did was like 75,000, but within a year and a half there was 750,000.
Wow. So that's a big jump.
Yeah, it's a big jump. But because the business is growing, and you can see it, and you get to know the people very personally, and you trust them, and you can vouch for them when you talk to the credit people. So, and also the credit people can see the payment history and how they manage their cash and so on like that. So,
So basically, if you are looking for a loan and you're looking for something that's within less under 500,000, is that correct? You want to go toward the community banks, the smaller banks.
I would recommend that.
I mean, if you do like 100,000, you can go to the bigger banks, because that's considered a small enough number that they'll just do a seamless paperwork.
Exactly.
Right? But a little bit more than that, under 500,000, you want to go to community banks, because then you can build that relationship for longer terms, right?
Right.
And also the good thing about it is that with smaller banks, you have more person-to-person interactions, right?
Sure.
If people are rejected from their loans, where did they go from there? Do they go to another bank? Did they retry at the same bank?
Okay. If some companies get declined, okay, probably the best next step is to go to a lender. It can be the same bank or another bank that offers a program that is with the Small Business Administration. Okay. So there are two programs with the SBA. There's a real estate focused program. We call 504. That finances with the bank partners with the SBA, and they can loan up to 90% of whatever the purchase value is. But you still got to have good credit for that one, everything. But okay, if it's a business or even a real estate where maybe you don't feel like that comfortable doing even a 504, then the most popular program is a 7A. Under that program, the bank gets guaranteed 75% of whatever you loan. So, and the ratio, what we do, like when we do the calculations and everything, like to qualify the business, it's more flexible. Or like the requirements can be quite a bit less than if we're doing a conventional business loan or line of credit or equipment financing or even a real estate. So, and during COVID, the coverage was the guarantee was 90%. And during the financial crisis, it was 90%. Could happen again. If we go into recession, like 2008 to 2009, maybe the SBA will increase the coverage again. But it lessens the risk a lot for the bank. So, and again, the standards are less. And most banks that are doing that SBA lending, if you are doing that, if you want to pursue that route, one thing you want to check is there are two. Every bank can do SBA loans, but there's two setups. There's one is a PLP, it's preferred lending program, or there's a GP, which is more of like it's not preferred, not a preferred status. If the bank is a preferred lending program status, they can approve the loans in-house without having to go to the SBA. Yeah, so that would be, if you get declined for a conventional, that would be the way to go, to SBA.
Gotcha.
And then, but talk to the bank, ask them if they have PLP. Yeah, that's important. So, yeah.
Well, thank you so much, everyone. Sure. John Curtis, CEO of Bank of the Orient. Thank you for your time.
Thank you very much.
If you learned something new or can relate to a story in this video, then please put it in the comment below, because your sharing can inspire someone else. If there is something that you don't agree with, please comment on how you would do it differently, because we are all here to learn from one another. Finally, please like and share this video so that positive knowledge can be passed on, and we will see you in the next video. Thank you. All right, everyone. Hello. This is Teresa Han from BAPA, and we have the amazing John Curtis today.
Thank you.
Yes, so he has over 38 years?
34.
34. I just added 4 more years to his life.